Hi everyone, welcome to the show. This is Glenn Hutchins. He's an early Ripple investor as well as he used to work at the Fed.
There will clearly be some modest implications of any Fed tightening for some of the tokens that are held broadly as money equivalents, and those would primarily be Bitcoin and maybe Ethereum. The other tokens, and particularly the non-fungible tokens, which I call horses for courses, which are tokens that operate inside networks for particular use cases, the monetary policy implications are essentially irrelevant. For giving an example, if you want to buy an NBA Top Shot digital trading card and you have to go interact with the Flow token to make that purchase or sale, you're not necessarily, that transaction has nothing to do with any thinking about monetary policy or interest rates or the money supply or QE or any of those sorts of things. One of the things that people who look just at buying and selling the token don't understand is there are underlying use cases that serve existing communities. They're trying to do something completely separate from just buying and selling the tokens. They interact with the tokens to accomplish something else, the use case for the marketplace or the network, as opposed to just own the token. And to the extent those grow in usefulness, it becomes monetary policy becomes less and less relevant.
All right, so crypto asset networks with utility. He gives the example of Flow, and Flow is an NFT platform that partnered with NBA Top Shots, which he's an investor in Flow, so that's probably why he's using the example. But anyway, he's saying that crypto asset networks with utility are going to decouple from what's going on with the traditional markets, right? So if we see a drop in stocks, we see something with monetary policy, that often is correlated with what happens with Bitcoin's price. Now, I agree with him in the long term, not necessarily in the shorter term. So if we see something soon, I don't think this thesis will play out like that. However, in the long term, I certainly see this thesis playing out. And whatever networks have utility are going to be insulated from speculation, from volatility in the market. So
these things.
I wouldn't call them predictions, but you did ask me for a market outlook, Becky. Mm-hmm. So I'll give you just a few thoughts, 5 thoughts. One is that if we move into a situation where interest rates are increasing, easy money is turned off. First, as night follows day, emerging markets will shutter. And the knock-on effects of rising borrowing costs, soaring dollar, surging food and fuel prices are always in my investing career bad for countries like Brazil and Russia, as well as the emerging EMs like Egypt, Mexico, etc. That's kind of number one, and that's just pattern recognition from years of looking at the market. Secondly, I would say to people, don't sell China tech companies, at least at these levels, until the 20th Party Congress in October. Where we'll see if their politics rotate away from nationalism and back to expansion, which is what a number, I think, of very smart people are looking for. Third, I describe this next one as shovel the manure out of your stable. Dispose of the frothy end of the market, the meme stocks, Dogecoin, the dodgy SPACs, all what I will call the technical term, all the crap.
Okay, but that's you're differentiating that from a lot of the other new things, Bitcoin and NFTs and others. Yeah. You're saying Dogecoin and things that don't have a specific that don't have a specific use case.
Dogecoin was started as a joke. It doesn't have a use case. Yeah. It's the frothy end of that token market. I would dispose of it. Third, Becky, I would look to space. For the next year or two, there's space will transition from what you might call a billionaire's playground to a commercialized sector. And I particularly watch the low Earth orbiting satellites, the LEOs, and things like the Elon Musk Starlink project to begin to have private use of space in very valuable, profitable, and commercialized ways. And finally, with crypto, over a year ago, you remember I started talking to you, you referenced it this morning, about the metaverse and the use of NFTs in the metaverse. In the coming year or two, I'm going to predict for you, this is my one prediction, that the new buzzwords will be DAOs, which are decentralized autonomous organizations, and zero knowledge proofs.
All right, so Glenn Hutchins says zero knowledge proofs and DAOs are going to be the next buzzwords in crypto. But he also mentions what happens if the Fed tightens policy, right? The emerging markets are going to suffer from that. The dollar gets stronger, food and energy prices skyrocket. So think about this. If you're a correspondent bank and you need a certain amount of, I don't know, let's say Turkish lira and the US dollar, if the Turkish lira is inflating and you needed to have a certain amount of Turkish lira, you're losing in that correspondent banking relationship. And that's why the trend for correspondent banking is starting to lower, right? So high inflationary environments, unstable currencies, these are all risk correspondents the incumbents are taking. And they're still charging the high fees, but how high of fees can they get to, right? Especially if the currency is being devalued at an alarming pace. So this just strengthens XRP's use case, especially for those smaller economies, as well as he mentions China going from nationalism to more of a global policy and opening up too. So that's big use case for public blockchains as well. So this is Peter Thiel.
Funding crypto on platforms where there are significant gaps in investor protection. If we don't address these issues, we, the feds, don't address these issues, a lot of people will be hurt, close quote. In other words, move the very regulatory regime that Bitcoin holders are attempting to escape, many of them. Just move that, put that same mattress on top of Bitcoin, the regulatory mattress on top of that market. How do you reply to Gary Gensler?
Well, even if all of that's true, it's maybe still better than the alternative, which is to have your wealth in fiat money. If you have a world of, let's say, 0% interest rates and 2% inflation, which we had under Obama, that's still over a course of 5 years. That's a 10% confiscation of your money, which is like the Cyprus type confiscation in Europe that was scandalous and shocking. All of a sudden, people's bank accounts got cut by 10%. We just do it. We don't do it nominally. We do it slowly with real things. And then, of course, this last year, where the inflation 6% and the rates are still zero, it's actually a 6% confiscation of people's cash. And so, yes, I don't know. It's sort of I'm tempted to say something like physician, heal thyself.
All right.
So even with regulatory uncertainty, right? Gary Gensler is making the quote that these markets are, we need investor protection, and it looks like the SEC is moving in to regulate crypto. But Peter Thiel is saying even with the scams and even with investors getting hurt, the inflation problem is so bad that you'd rather be in crypto than to even deal with the inflation. So he uses the term physician, heal thyself. Before attempting to correct others, make sure that you aren't guilty of the same fault. So he's saying the SEC is hurting the same people that are investing in crypto, and they're doing their best to deal with inflation. So Peter Thiel is pretty active in crypto. He's an investor in RSR and BitDAO. So crypto IRA platform iTrustCapital to integrate with Fireblocks. The move will enable iTrustCapital to expand the custody of clients' assets and introduce new products and services across the decentralized finance stack while providing an enhanced level of security for customers. So iTrustCapital has integrated with Fireblocks, and it sounds like, eventually we're going to start seeing some services across decentralized finance, as well as the security of your crypto assets are being upgraded. So big news from iTrustCapital. If you use my link itrust.capital/Darren, you'll get $100 funding reward. And if you're not familiar with iTrustCapital, they provide crypto IRAs and precious metals. So use my link, check them out, research them, and see if it's a good fit for you. This is China and Russia pledged to step up efforts to build an independent trade network to reduce reliance on U.S.-led financial system. So Glenn Hutchins also used the example of Russia, being hit the hardest when the Fed tightens policies as well. And it says, he added, third countries would not be able to influence this network. So China and Russia are bypassing the SWIFT network, and it sounds like they're bypassing the dollar for bilateral trade. So that's pretty interesting. We'll see how that develops. This is Christian Carlo.
Gary Gensler is actually tougher or stricter than the SECs of the past?
Well, the phrase I would use is actually regressive. You know, we've got a new innovation that has brought more people into the financial markets with a great deal of enthusiasm and excitement, more so than Wall Street has seen in generations. And yet the SEC's approach to investor protection is basically to limit market access for the most those innovations with the greatest potential, to limit access to accredited investors, basically wealthy or sophisticated people. I think the math is about 13 million out of 300 million Americans qualify as accredited investors. I mean, that's a tiny sliver, a tiny slice of the American populace that the SEC will allow to access some of the most exciting innovations. I mean, that's a type of a paternalistic investor protection mandate, or at least as interpreted by the SEC. And its approach to enforcement is what some people call regulation by enforcement. That is, that there's no way of knowing how a new crypto might qualify as being subject to the SEC and its investor protection regime, other than by the force of an enforcement action by the SEC. And so I would really characterize the SEC's current approach as unfortunately quite regressive at a time when we've got a new innovation that is bringing more people into financial inclusion. And so in my book, I do recognize there is a need for investor protection. In fact, we were strong on that ourselves at the CFTC. But I think it needs to be done in a way where the SEC itself is innovating. And I think it certainly needs to innovate its approach to investor protection to accommodate more of American citizenry into the financial system, and not, in a sense, restricted only to the wealthiest and most sophisticated investors.
So Christian Carlo is influential, right? During congressional hearings on various crypto topics, Facebook, Diem, they often call Christian Carlo and they talk to him. Now, he's a former CFTC chair. His opinion has weight, and he sounds very unhappy with how the SEC has been regulating crypto and just everything in general.
One and the other, you know, all new innovations threaten the old guard. Whether that actually arises to a threat to the national economy and to the global economy is a second question. And a lot of times I heard discussion of the threats of this innovation, but they really seem to be threats to the status quo. 25 years ago, when the first wave of the internet came about, that was greeted with an official Washington response that was first do no harm. Now, what I'm hearing in some cases is a policy response that seems to be saying, first protect the status quo. That's very much how I read the recent President's Working Group, the PWG report on stablecoins. It pointed out a lot of the risks of this, but its response was, in order to prevent that, we need to defend the status quo. And I think that's a bit of a disappointing response, because just as, yes, this technology will disrupt a good portion of the status quo, it could bring with it a much more open financial system at lower cost, at greater speed, and most importantly, with greater financial inclusion. And so I think we need to be more open-minded in line with our traditional American open-mindedness to technological innovation that's gotten us through the last several decades in such a spectacular fashion.
All right, so he's pretty disappointed with the President's Working Group, and their stablecoin regulations were in favor of the incumbents. Now, this is an article by Benoit Cœuré. It's in the Financial Times. It was an interview, rather. And Benoit Cœuré said the Financial Stability Board, a global grouping of finance ministries and regulators hosted by the BIS, would be the most natural forum to agree consistent framework and that it was possible for them to do in 2022. So he's saying that the FSB will be able to, it's possible for the FSB to have a crypto regulatory framework by 2022. But he says that also this could take 2 or 3 years away from having stable landscape globally. So they set up the framework, but it would take 2 to 3 years longer to carry out throughout the world. He added that crypto frameworks could include agreements on categories for different activities in deciding whether a stablecoin, a form of cryptocurrency backed by traditional assets like the dollar, is electronic money, a money market fund, or a security. So I think, the FSB is going to have some input on whether crypto is a liquid, solid, or gas, even though they're specifically talking about stable coins in this excerpt. I think, when this crypto framework comes out, we'll see some more news on how to classify different crypto assets. Now, this is Shakir Gupta from the IMF.
Opportunity for global economy.
I think it's both. I think there is always the promise of a technology that we just don't know, that in a decentralized fashion, people might discover many different ways of using it. Distributed ledger technology is already being used in other kinds of service provision, so there's value to it. But we do worry that there are some serious risks associated with it. And the truth is that it's not anything a single country can deal with, because if individual countries regulating heavily or banning, which we do think that regulation is important, but at the same time, most of these crypto exchanges can be done offshore, and so they're not subject to the jurisdiction of a particular country. So it's hard to really regulate this.
But the money still has to be transferred. For person A in India to buy a crypto, say in jurisdiction B, wherever, some money has to be transferred from this jurisdiction to another one, or the money has to be transferred back for you to.
Yes, but this is, as I understand it, there are many ways of doing this on the darknet, which evade the kind of typical regulatory systems that can.
And you'd worry about that.
And we worry about that, absolutely. I mean, particularly, it's worrisome. In fact, we're seeing this phenomenon becoming a bigger problem in emerging and developing economies as compared to advanced economies, because in advanced economies, again, the attractiveness of crypto assets and cryptocurrencies is less so than in many emerging and developing economies.
Why do you say so? I'm just taking an extra minute because I'm very curious about this. Why is it so? Why is it seen as a more reliable option in emerging or poorer economies?
In countries where you have a much more population which has banking accounts, there's very high levels of financial inclusion, these kinds of assets are not necessarily particularly attractive because you already are in the financial system. But if you're in a country where you don't have access to banks and to loans and you're financially not included, then these kinds of technologies can start looking attractive.
So how are these different, say, from chit funds and Ponzi schemes, which basically target the poor and the lower middle classes, while the better off people have access to banks and more conventional?
No, this is absolutely one of the reasons why there needs to be regulation, because you are exposing gullible people to some very, it sounds like some magic money that you can get.
Exactly.
And, while, again, if you look at the numbers, I wouldn't say that we have a problem right now in terms of global financial stability or anything like that. But the rate at which these assets have grown is quite troubling, and this can grow very, very quickly.
Do you see governments, sovereigns beginning to ban it now?
Well, China, of course, banned the Bitcoin. There are some countries, I'm not going to be able to remember them, but they banned parts of it, which is that you cannot use it for certain kinds of payments and so on. But I would say the overwhelming approach is more on the regulatory front.
And so what will be your advice to India? Because we are still debating a bill.
All right, so the global landscape, right? Regulators are going to push from the IMF to regulate crypto as a whole, kind of backing what Benoit Cœuré was saying. So the IMF is on board with that too. They see the innovation aspect of this, but they also see, some of the Ponzi schemes and some of the problems with it, and that's why a global framework is on its way. Now, the U.S. government has a massive secret stockpile of Bitcoin, right? So from BitConnect, the money that was confiscated from BitConnect, they're going to auction off. But this doesn't affect the price of Bitcoin, right? The U.S. government's not going to sell it on the open market. In fact, this is how Tim Draper started his first position in Bitcoin. There's, usually like a private sale type of thing instead of selling on the open market, which would harm the price. So this is an article written by the Interledger Foundation, Brianna Morberry, and she talks about just the Interledger protocol and how it could be used for inclusion and the benefits that it would have. And it says that it's she also mentions that this would help with the United Nations roadmap on digital cooperation by June 11th, 2020. It's this is pushing for inclusion for everyone by 2030. So ensuring digital inclusion for all, including the most vulnerable, and it's going for 2030 is the goal. The other thing was crypto investors get a temporary win as Biden's plan stalls. So the Build Back Better plan, there was some harmful regulations as far as capital gains tax is concerned, so that this bill didn't pass. It kind of is helpful with capital gains, although I think eventually we'll see this this capital gains clause come back up in another bill. But anyway, it's saying that if you sell something 30 days before, you can't deduct it. So it's pretty good that the bill hasn't passed, and we'll see what happens. But as far as crypto taxes and capital gains are concerned, we're okay right now with it. The other thing was, this is United States strategy on countering corruptions, and it says the U.S. will continue to review the risk posed by digital assets, including the ways in which corruption contributes to those risks, and will continue to refine policies and regulations as needed. As appropriate, the United States will engage countries to help them with the analysis and development of central bank digital currencies in a manner consistent with stability. So I bring this up because it kind of fits into what I was saying with Palau. So if you haven't watched that video, be sure to watch it. But Palau, if the United States is active with CBDCs, they guide other countries, they give them their input and everything. So this just kind of reaffirms what I was saying with the Palau video. So I wanted to mention that to you. So I'm working on another artistic video right now. I know a lot of you guys enjoy them, so I'll be working on that. And I just found all this information. I wanted to make a video just summing it all up. So I hope you guys all enjoyed. If you have any comments or questions, I'll add all these links in a pinned tweet above. So let me know what you guys think. Be sure to like and subscribe. Thanks for watching.